IRS, you'll find it.
But then, and you differentiate yourself from that whole group of people who do those types of settlements because you go deeper than just the step layer one?
Well, we have more to answer to, in a sense. We're CPA, I'm a CPA. And as certified public accountants, we're licensed by the state. So we're not interested in losing our license because it takes so much to get it.
Mm-hmm.
You know, it's just not hanging a shingle out one day, say, hey, I do IRS work, or I do tax work, or I even do accounting work. This is certified public accountant, is a licensed person that works for the public and is designed to give opinions on companies as well as handle tax returns and so on. So our ability goes a lot deeper than kind of like a surgeon and a nurse maybe,
Mm-hmm.
or a surgeon and a health practitioner or something. You know, we have the depth of our knowledge goes far deeper than a regular routine tax preparer.
Right. A tax settlement through you guys is going to be a lot more detailed.
Yeah. It's going to be more effective. You know, we don't promise results. You know, we don't promise that their case will get resolved. You know, a good example is, you know, I did a golf pro that owed $35,000. We settled this case for $1,000. That was just a little while ago. Yeah, that's $35,000 now won.
Mm-hmm.
Okay, that's a pretty good settlement. But then again, I had an elderly lady who owed $90,000, and the best I was able to get was $49,000.
Mm-hmm.
Well, you'd say, Ed, you know, looking at that, you should have got her out for $3. Well, it doesn't work that way. There's so much that enters into it, and most of it pivots off of what is your financial status. If your financial status is good, well, the IRS isn't going to give you a break. Say somebody owed you money, and they come to you and say, hey, I'm dead broke, don't have a job, and I'm moving to Texas, and I owe you $10,000, but I'll give you one right now, and we'll call it even.
Right.
Well, you're making an executive decision, right? Well, I may not ever see this guy again. Maybe I should take the one and be thankful I got it, or maybe I'll pursue him for the other 10. Now, I'm not saying which one you'll do, but I'm pointing out to you that this is pretty much what the offer and compromise settlements are with IRS. But there are other ones too. You know, first thing the IRS wants is you to pay it.
Sure.
If you can't pay it, well, then what have you got? Well, you've got the installment arrangement. Well, can you pay it on? You can't pay it all at one time. Can you pay it in time? Okay, over 60 months maybe. Or the statute of limitations, which is 10 years. And can you pay it out over that period of time? Maybe not. And if you can't, well, then it's called a partial installment arrangement, whereby you'll still make payments, but at the end of 10 years, the statute runs out, and then the IRS doesn't collect from you anymore because there's a statute of limitations on collections, right? Then you have a penalty abatement, which is getting today to be fairly hopeless, but I've resolved some cases well with penalty. In fact, I just did one today. Was a fellow, like 14,000. We settled for about 11, and that was because it was the $3,000 penalty abatement. Okay, it's not all the part of loaf is better than no loaf at all, you know, kind of thing. And what's the other thing we can go into is bankruptcy. Many people don't know you can bankrupt yourself out of income taxes, assuming you meet the 240-day rule, the 2-year rule, the 3-year rule. So I don't do bankruptcies. However, I know about them. And if it's best for a client to go into bankruptcy as well as eliminate all their civil debt, why not? You know, why not do a bankruptcy? You know, then there's hardship uncollectible. Okay, IRS, I owe you the money, but now I'm barely making enough to eat beans around my pool, you know, with crackers or something. You know, that's all I've got to eat. And if that's the case, well, then the IRS gives kind of a hiatus for a couple of years until you get back on your feet. That's called hardship uncollectible, or currently not collectible. And with the proper financial statements, you can get one of those. So it doesn't eliminate the problem. It just kind of postpones it. And if you're still in bad shape in 2 years, well, maybe then you do it again for another 2 years. The end result is if you do it enough, the statute runs out. Remember I told you about the statute of limitations? Because with currently non-collectible, the statute does not add, or called tolling, T-O-L-L-I-N-G. It doesn't toll. It doesn't add on to the 10 years. But an offer and compromise does, which sounds a lot like a hardship uncollectible, but it's not.
Interesting.
Offer and compromise is IRS, I owe you the money, and will you take less? And here's how much I'm offering. And if your financial statements point to that, and the IRS feels that that's all they're going to get out of the deal and get you back into the system, keep you current, because our stipulate 5-year compliance issues and so on with offers. If that's the case, well then the IRS has more incentive to bring you, and to accept your offer. And of course, the third thing is if you duck the IRS for 10 years, then you don't have to pay them anything, but it's a long time to hold your breath. Most people don't want to do that because during that period of time, they want to get married, right, or they want to get a home, or
show up on radar.
So eventually they need to serve. It's kind of like whales; they can stay pretty low for a long time, but eventually they do have to come up. You don't know where that Japanese whaler ship is, So it could be a little bit risky and at that. So those are usually the ways that you can deal with IRS on these kind of things.
And you have specific expertise with the IRS because I mean you're.
I've been doing it 30 years.
You've been doing it 30 years.
And most CPAs don't like doing this work. This is dirty work. This is like digging a trench. Most CPAs want to do their work and do it clean and not ever have an issue come up. I mean, that's our goal. But stuff happens. And when stuff happens, they're not used to going back in and digging up the old pipes and laying new ones, because that's what audits are like. Nobody wants to go back in and take a look at the pipe and see, we're doing autopsies on long deceased people, kind of thing. That's a messy work.
Yeah.
As a result, most CPAs don't want to do that. So I get quite a few referrals from other CPAs, from attorneys, enrolled agents, other tax preparers who don't want to do this work. It's long, it's drawn out, it's time consuming, and very few CPAs have a lot of these each year. So why do they want to gear up for 1 or 2 of these a year and probably not be able to bill their client for the time?
Yeah.
Right? Because if they don't know what they're doing, they're going to spend more time on it, right?
Yeah.
And then they have to either eat their time or try to bill a client and risk the loss of the client.
Sure.
Better to send them to somebody who does a lot of this, and we just give the client back to the CPA who or the agent or whoever referred them, so that way they only stay their agent. We just handle a small portion of it. Kind of like the medical profession today.
Yeah.
As a general practitioner, you go there, they're testing you. There's well, wait a minute, I see something here. I think you should go see the specialist over here, because that's all he does. Well, when he goes to specialist and he's done with you, guess what? You go back to your GP, right? Well, it's the same kind of thing. Only I'm the specialist, and if I can use that word, I concentrate in that area.
In what area?
IRS negotiation and settlement.
Go ahead.
Okay. What was the question? We want to know the difference
The
between
attorney, CPA and attorney.
The attorneys, well, the CPAs are kind of like mechanics, in the sense that we're doing all the trench work, building it all the way up, and we pretty much stop right at appeals. Appeals is pretty much the top tier of dealing with the IRS, and I get most of my settlements in appeals. I find it's very difficult to get anything below the appeal level. On the other hand, the attorneys, if they do not get a settlement in appeals, they can throw out the hazards of litigation and say to the point that, well, we'll go to tax court. And what happens then? Well, if they win in tax court, then all of a sudden this case becomes precedent, or it can become precedent. So the IRS doesn't want to lose a case in tax court, so now everybody else piles in on this loophole, so to speak, or this one case. And and by the way, tax court sides with IRS far more than it does with the civil side. Please understand that. But that doesn't mean that you can't win cases. And there are some very famous cases that were won in tax court, where the IRS, especially in certain cases, was really egregious. But it keeps the IRS from being too egregious, the tax court. So attorneys can take it one step further. But as far as the actual representation up to appeals, it's about, it's my opinion that CPAs can do the same thing that attorneys do.
Possibly better, in that you're a CPA and you're finance driven as opposed to legally driven.
Well, to a point.
In my opinion, just guy off the street, this is a financial situation, this is not a legal situation. I would like to have somebody with some serious financial background and history.
Yeah, really, once you understand that the IRS is only after money, period, it gets to be, okay, they only want the money. What can we do to resolve this? How can we negotiate this to the client's best advantage? What is the best solution of the 6 I just pointed out, things you could do? You know, what can be done? And you pretty much figure out the best one, and then that's the one you attack. And can attorneys do it any better than CPAs? I don't think up through the appeal level, no, unless, and the one thing is is maybe the research. Let's say the attorney wanted to research every possible case back to 1930 on hobby losses, you know, that kind of thing, or whatever the loss might be. The attorney may have one-upsmanship basically because they have better research. But mostly when we see what the problem is and we determine, hey, this client really does owe 30 grand, but he's only going to be able to pay 10. We don't have any tax court case to resolve that. That's not necessary. It's a negotiated settlement at that point. What's the best way to settle this case? You don't need to go into 1930 cases of Commissioner versus Higgins, right? You just go.
And I would imagine 70 years or 80 years of research is going to cost a bit more than.
Oh yeah,
fixing
that's the other thing. That's the other thing is attorneys do have a habit of charging more for what they do, but that's I'm not knocking what they do.
No, and you're not saying anything new.
I'm not saying
you're not saying
that's bad.
anything new either. Yeah, no. That's just.
But it's another
some
reason to
common
look
sense.
at, you know, considering a CPA over going with an attorney in these types of situations.
It's one of the factors, right?
One of the factors, and a lot of times, most people feel comfortable with CPAs. Hey, they're seeing them at least once or twice a year. Tax attorneys don't usually prepare tax returns.
Right.
Who does that? CPAs. You know? Who do they see about writing up their books and records and keeping their stuff straight so when they go to IRS it's in some kind of order? Do attorneys want to do that? Hell no. You know, they want to go in and argue the case and come out with the best thing, but do they want to get into that detail? No, that's what CPAs do. We're kind of the termites, so to speak. They're digging up the foundation matter to determine what's the best thing to do. And we make the decision and we go forward from there.